I actually saw I saw an interesting video earlier today by an American comedian actually,
Okay.
who was going on about an AI bubble. And he was saying that the only reason the US is not in a recession is that the whole AI bubble has been propping the whole thing up. And in a way, yes. I mean, you look at the market caps of the Magnificent Seven on the S&P 500, it's huge. And as AI continues to keep on, you know, pumping money, and there's a lot of money being pumped around in between the companies as well. It's kind of it's almost like a spider web between the companies where you can sit all of the different companies at different parts of the spider webs. That's how interconnected everything is and how
Mm-hmm.
interconnected all the finances in there. So
Oh, for sure.
it could be very interesting. So we'll have to see how this is going to look. I think we have a bear market coming. I think we have a recession coming. Will we get it? Will we get it in 2026?
All right. This is live. Welcome to Convos with JJ, our first ever official podcast. And tonight we have a special guest, Candace from Mountain Finance. And so everybody who don't know who Candace is, would you like to basically give an introduction to yourself?
I can do that. I can definitely
Awesome.
do that. So I'm Candace from Mountain Finance. I have a little YouTube channel out there. I cover finance, mostly
Mm-hmm.
stocks, ETFs, and we'll talk a little bit. I think a little later we'll probably talk a little bit about kind of the market. I find the market has actually transitioned from mostly stocks to a lot more ETFs.
For sure, for sure.
But yeah, no, I have a channel, a lot of content, very regular, and JJ was one of my mods. Well, actually,
I
JJ
still
was
am.
my only mod, and he decided to make a channel. Yeah, there's no way I couldn't be his first guest because and he certainly helped me out along the way.
It's
Returning
been
the
a pleasure
favor for
so
sure.
far. Yeah, so the idea behind this kind of podcast was really to bring on guests of any kind of caliber and to really, whatever really sparks a good conversation, talk about culture, talk about life, talk about clearly this is technically a finance channel, so we'll always go back to finance in some sort of manner. But the idea is really to keep it open-ended, to like not really have any sort of restrictions put in place. So to start off, I think this would be a really good question for the greater audience in general. What kind of, do you have a sort of, can you talk a little bit about your background in terms of finance, in terms of how you got into this space in particular?
Sure, that's actually a very common question. I get that quite a bit. So
Mm-hmm.
my background isn't even finance. My background is, well, I graduated with a double major in biology and chemistry.
Mm-hmm.
I worked in a lab for a while, so testing water, most boring job I've ever had. Even more boring than math, believe it or not. I went into management, I've been in tech. I just don't know. For some reason, at one point I was thinking about finance and
Mm-hmm.
it really started to interest me. And I'm that type of person that when something interests me, I will learn as much as I can. I will devour information voraciously. And that's what I did with technology. And as I was learning more and more, I also have a strong training background. So I'm used to learning stuff and then teaching it a lot. Like I did that in technology. I was a trainer and then a trainer manager for a long time.
Mm-hmm.
So I was kind of like, well, now I've learned all this. I wanna give some of it back. I want to be able to, uh, well, I guess help people who don't understand technology, who don't understand finance. We're sliding.
That's okay.
But I at that point, I'm like, okay, how am I going to do it? What will be my avenue? And I kind of decided that YouTube would be a way to go.
Mm-hmm.
So I didn't just make a channel. I took the smart route. I got myself involved with a couple of channels that were already active. You know, by becoming I don't want to call them a super fan, but basically by becoming incredibly helpful,
Mm-hmm.
incredibly helpful.
Mm-hmm.
And you know, when I was ready, you know, probably after about 6 months or so helping other channels, then, I kinda already had a ready-made audience to come. So
Okay.
that really
Very
helped. So
interesting.
when I launched basically about 4 years ago, I had a good I think I had before I even dropped my first video, I had like 200 and some odd, subscribers as a result. It doesn't sound like a lot, but it was a good base to get things going.
Hmm.
Yeah, and then I haven't really looked back. I'm always reinventing the channel, always adapting to, I guess, the whole vibe of the financial community, especially the YouTube community, because it evolves. It evolves in
100%.
big time. Like when I started the channel, covered call ETFs were kind of not even really much of a thing. There were a few of them, but now, boy, holy banana bread, there's a ton of them. There's more than you could shake a stick at,
Right
and
on.
that evolution is exciting to me, especially as a content creator. It makes it a lot easier to stay focused and to stay enthusiastic about the whole.
Right on, right on. So let's touch base in a little bit more in terms of your academic background, just to really build that rapport. So what made you want to, back in your university years, what made you really want to go into biology and chemistry as a double major? And how did that transition away from really build like continuing and going with that side for your career
Sure.
wise?
Yeah, going into well, let's actually start. Let's go a little bit before that.
Okay.
So back in school, so I was I was good at math, I was good at science.
Mm-hmm.
Um, but I didn't do super well in a lot of the other subjects. It wasn't, it was just simply because I was bored. I was very, very bored in school, and I never really became focused. It wasn't until grade 11 that I decided to sort of buckle down. And here's the reason. My sister was dating this guy who was the number one student in the school.
Okay.
And
Okay.
she was talking like he was the smartest thing since Einstein. And I was just like, he's really not that smart.
Mm-hmm.
And I made a comment one day. I said, "It's, what he's doing is no big accomplishment. I could do it easily." And I was laughed at. So, I decided in grade 12, that's what I was gonna do. So I did. I went in, I turned my focus, and I have a very strong focus. I turned that on my academic, on that year, and I did finish in 1st place. Even though it was funny, even during the year, the people who had all been at the top of the academic charts, they were kind of like, there's no way you're going to pull this off. You can't pull this off.
Mm-hmm.
You you know you've just been getting by your entire life, and I'm like, you'll be surprised. So I mean, it took a lot of hard work. I was generally typically because I would take the textbooks for my classes, I would read them and devour everything about them. So I was
Mm-hmm.
typically about a month ahead of where we were in the class, which, was fantastic. It actually served me well. A funny little story. So in physics class,
Mm-hmm.
I got caught talking while the teacher was getting ready to talk about color theory. So
Okay.
he threw the chalk at me and said, "All right, since you don't seem to need to know about color theory, why don't you come up here and teach this class?" And I was
Okay.
just like, "Okay." And I went up and started doing it, and that actually annoyed him even more because he was thinking he was gonna knock me down a peg, but it kinda backfired because, like I said, I was ahead. But the funny thing is, that same teacher, he was also, my computer science teacher, and
Okay. Okay.
he was also the coach of the girls' soccer team, so he had a game, and the school had nobody who could really sub for him for 2 days. And it was just one class. We were the only computer science class. So he actually came and said, "How far ahead are you in computer science?" I said, "Pretty far." And he said, "Would you mind teaching for 2 days?" I was like,
Okay.
"Nope. I will absolutely do that." So, I got to teach. I got to teach a tiny bit, and I loved it. It was fun. But going into university, so I was number 1 in bio, like my score, in grade 12 biology, I got 99.
Very nice. Very
I
nice.
lost 1 point on a stupid tiny mistake. It wasn't even a mistake, it was more or less I accidentally didn't I don't know, I hit the wrong box on one of my exams, afterwards, I looked at it and I'm like, "Oh my god, I can't believe I did that."
Mm-hmm.
But, I mean, I was number 1 biology, number 1 in chemistry, number 1
Mm-hmm.
in physics, and when going into university, I didn't like, my 1st year university before I even had to declare,
Mm-hmm.
I was trying to keep all of them together. So I was
Right.
taking, I was taking biology, chemistry, and physics, as well as calculus, and I took English that year too because I wanted to get that out of the way
Right, right,
because you
right.
had to have that one English course. So yeah, I kind of wanted to triple major, but they said no, you can't do that.
Triple major. What was the
I
third one?
wanted I wanted to triple major because I love physics as well.
Mhm.
But nope, they said nope. They said you can do your double major, but then you can always come back and do an additional one in physics if you want. And I was just like, no, no, I'm not going to come back. So I ended up having to narrow it down. So ended up choosing biology and chemistry. They worked well together. Kind of part of, and the funny thing is, part of the whole thing is that if I had chosen physics over chemistry, for example,
Mhm. Yeah.
then I would have had to have kept some more math in, and honestly, calculus was a huge time sink. Maybe I don't know if it was just my professor, but he would give us problems, like a set of problems that we'd have to do that would take bare minimum an hour to an hour and a half, sometimes 2 hours to do every night.
Oh my god, okay.
And that's what I mean. It was just a time sink. So at that point, I'm like, even though I love math, I can't commit that amount of time. And quite literally, I think my third year,
Mhm.
I was taking 5 science courses. I had 5 labs every week.
I remember those days for sure.
Yeah, it was intense, but I did enjoy it. Now I thought I was thinking about going further in science, but as life has it, you get out. I had a half decent job in a lab, and I was like, what do I
That
want
was
to do?
your
Do I
first
want to
job
go
out of
back?
university, basically?
What's that?
So that you mentioned that you're working in a water testing lab. Was that your first job basically out of university, or did you get
Yeah.
it during university?
No, no, no. It was after university.
Okay.
Yeah, and basically, it was just making sure that it was at a solid waste site. So my
Okay.
job was I'd leave the lab, I'd go to the solid waste site, and there'd
Mhm.
be a lot of these drilled wells all over the site. And I would take water samples from all of the wells, as well as a stream that ran out of the site as well.
Mhm.
And I would be testing it for things like biological oxygen demand, so BOD, suspended solids, a few other things like that, just to make sure that nothing bad was getting into the environment. And one time I actually did find some readings a little bit higher on the stream leaving the dump site. So
Mhm.
they actually had to dig up and put a giant filter system in there because of my results.
Okay.
So that was one of those things like I'm sure glad I was right about this because they also took the water from that sample and they send it off to the Victoria General Hospital in Halifax just to verify that,
Okay, okay.
get a second opinion if it's going to cost a lot of money to the municipality to fix it all up. But from there, I then kind of got sidetracked. I got sidetracked with, I think it wasn't so much like I had planned to come back to science, but
Mhm.
I kind of wanted some management experience. And that's kinda where I went. I'm just like, let's get some management experience, and that eventually led me into technology, and I loved technology, and then all of a sudden you notice, "Oh, yeah, it's now 10 years away from university, and
Wow,
I
okay.
just don't think I'm gonna get back," and I didn't, but there's always a part of me that's like, "I miss science."
What kind of managerial roles did you basically go into going through that, I
A
guess,
little bit of
10-year
everything.
period?
So, to get my initial exposure to managerial, I went into retail management, did that
Mhm.
first for a bit. So, I managed an art gallery.
Oh,
I
very cool, very cool.
managed a big department in one of the superstores out west.
Mhm.
And then I went into technology, moved into training because at that
Mhm.
point, that's what I wanted that training background. And then I eventually, after about a year of training, they needed a new national training manager. And because of the previous management experience, I became a shoe-in for it. And that was actually a funny, funny thing. I got to do my first salary negotiation.
Very nice.
So, and here's the thing, this is a few years back. So at that point, they didn't pay a lot, this company. It was basically an internet company on the West. They didn't pay a lot.
Mhm.
So I went into the salary negotiation and the first offer they threw at me was 40,000 a year. Now this was more than 10 years ago. So this was about 10 years ago, maybe 11 or 12, I don't know. But 40,000 was a good amount at that point in time.
Right.
I was happy with the 40,000, and because it was significantly more. I was making at that time, I was making about 30. So it was basically, we'll give you another 10,000 a year to do it. I was happy. I was willing to take it. But I made a sound because I wasn't expecting an offer that good at that time.
Okay.
And the guy who was negotiating, I'm sometimes very hard to read. So
That's a good thing.
he took it as I was disapproved. Like he thought I was kind of annoyed at it. I
That it
wasn't. I
was
was
too
mad.
low.
And he then came, look, he says, "Look, I don't want to I don't want to argue with you. You will win. The highest I am authorized to go is 50,000." And I was like, that's what I was looking for. That's what that was my recovery. And
You
I
just straight
walked
off
out of
got
there.
$10,000 raise after making one
Yeah, I
sound,
mean,
huh?
I walked out of there with an extra 10,000 a year based just on that. So I was like, okay, cool.
Wow. Very nice, very nice. And then from then on, how long did you spend at that which company was this? After the
Uniserve.
negotiation? Okay.
There's a company called Uniserve. So they're a tech company. Basically, they do internet for, they kind of do dial up, ADSL, cable,
Mhm.
all of that. And
Okay,
then
okay.
they had a company that they bought in Montreal. They also had a small company they bought in Edmonton. That's kind of one of the things. This was a company that was very famous for buying up all kinds of little companies. So in many sense, a lot of their systems were Frankenstein together. So there was lots of room for tech support and that. And that's kind of what my department did is we did the training. We taught people how to troubleshoot computers
Mhm.
from the ground up. And when I became the manager, I also became the manager of the customer service side too. So I had
Mm,
to do that side as well. And I also had to travel between the three centers. So they had call centers in Montreal, Edmonton, and Vancouver, which is where they were based out of at the time. So I got to travel a little bit. It was always I always loved when I got to go to Montreal actually because that's one of my favorite cities. And they'd always put me up in a hotel. Actually, one time the hotel they put me up, there was a small fire in it.
what
So
happened there?
I d- I don't think I ever found out. I just know I could smell smoke. It obviously wasn't that bad because we basically were allowed back in after about half a day.
Mhm.
But still, it was kind of funny that that had happened.
Okay, so between for when you were traveling to all throughout all those places, was it basically for work or was it mostly for vacation per se?
No work. I'm not
Okay.
I'm not a big vacation person.
No?
Excuse me.
Okay.
Boy, it's very rare that I go on vacation ever.
Mhm.
Like, since this channel has started, the closest thing I've had to a vacation is my mom coming to visit
So this past week.
this past this past week.
Okay.
That was the closest I've really been to a vacation during that time.
Why is
But,
that?
I think the big thing is right now, it's important to me to put in the time to build the channel, get it where
Mhm.
get it where it'll be sustainable, completely
Right.
sustainable, because it takes time on YouTube to get a bit of a following to,
For sure, for sure, for
you
sure.
where you need to. Like, you're starting your journey, so you're probably looking at up to a year where you're gonna be doing it absolutely for free.
Possibly. Yeah. That's
It
usually how it
depends, it
goes.
depends. I mean, you've
But
got
then when we're looking at this organic growth, what do you think about I don't know if you've noticed, but definitely other on the YouTubers who are focused on the cover call space, which is now a hot topic. Clearly, we
Mhm.
have Perry from the PII verse, and then we also have Paul Santori. I'm just listing these two off of the bat as examples, who has a YouTube channel called Better Call Paul. And
Mhm.
so basically their YouTube channel, because they've already built such a huge rapport from Blossom, as soon as they migrated over to YouTube, they pretty much hit the 4,000 watch hours, 1,000 subscribers within a month. So what do you think about
Wow.
that kind of growth?
Well, that's great. I mean, and I'm a big
And
proponent
right
of
now,
Blossom, of course.
just to add to that information, after they pretty much did their channels, give or take about 3.5, 4 months, give or take, they're around the 7 to 8,000 subscriber range, and it's pretty much growing at a constant rate.
Absolutely. Yeah, no, I think Blossom is a wonderful tool. And I think it's also a really good launching space
Hmm.
for if you want to go into any kind of social media. That's a really good spot. I mean, basically you're preaching to a lot of like-minded people that are
That's
there,
true.
so
Yeah.
it makes it's an easier audience to convert for sure. And I do like it. I mean, I'm an ambassador over there,
Hmm.
and, you know, I'm very honored to have had that happen. That was kinda left field, but, you know, just to sort of give you the background on that, it was quite literally my channel at that time, I didn't even have 2,000 subscribers at the time. I had maybe 1,800 or so, somewhere between
Hmm.
16 and 1,800.
Okay.
And all of a sudden, I get an email from Brandon Beavis. I'm like, "Oh, I wonder if this is real." That was kind of my first thing.
You thought it was a potential scam or some sort?
Well,
Just
you never know. Today, you have to
honestly,
always
nowadays
ask.
you can't tell. Like,
You know,
yeah,
he just all he asked is, "Hey, you know, let's do a sit down." And I'm like, "Okay, well, it's hard for a scammer, to, you know, pretend to be, Brandon and then actually do a video sit down."
exactly.
I was like, "Yeah, sure, let's do it. Let's do it. Let's see what happens." But no, it really was him, and, you know, and he was like, you know, he says, "We're building this thing called Blossom,
Hmm.
and, you know, we're looking for people who fit the mold. And, I've been, you know, I've been checking out your channel, and I like what you're doing." And I'm like, "Okay." At that point, I'm like, I didn't realize that, you know, people like, I knew, like, I had my core audience,
Hmm.
but I didn't realize that I was reaching out beyond them a great deal.
Right. Right.
You know, you kinda sorta get, I guess it's like you almost get into a bit of, it's, I don't know if it's like blinders. It's kinda like, you know, you have Candace World, and it's like, "Okay, well, this is how big Candace World is." But, you know, you come to find out Candace World is bigger than I thought. I'm kinda like, maybe I'm not even the mayor of Candace World, I might be the mayor of Candaceville, but, you know, and it was interesting. So, you know, I had that conversation, and of course I was like, "Yeah, absolutely. I'm all in." And, you know, that was a good thing. I mean, did it bring a whole bunch of viewers to the channel? Yeah, it brought some. It brought some.
That's good.
It brought you.
Clearly, yeah.
Yeah,
So
so,
that's a
you
good
know,
thing.
it's one of those things, like, no, and I do like, I like what Blossom is doing, and I certainly do my bit. I do my bit as an ambassador to preach, but I wouldn't be an ambassador if I absolutely thought that, Blossom was a pile of garbage. I certainly wouldn't then. But yeah, no, that's been fantastic. I certainly love it. And right now, yeah, you hit on a point that I like. Covered calls, the covered call community. It
It is
is growing.
massive. Yeah.
I mean, back in the day, it was pretty much Adriano. That was
That's
it.
it. Yeah.
And, now you've got Adriano, you got Jordan, you've got, like, Gary, and, you've got you, kinda that
Well,
thing. Now,
with Gary, he's not a full-on cover call investor. He's really just building a report, like a sort of case study.
okay,
So
okay,
he's up
fair
and
enough.
coming. Like, he's actually still the majority of his overall portfolio. He did mention that about 70% is in value stocks, so stock picking, and
Mhm.
then 20% give or take is on, you know, the traditional growth indexes such as VFV, XQQ, and then we have VTI, VUS, all the indexes, as well as XTQTs or sort of those, basically, which makes up core holdings, which is split among Vanguard, iShares, BlackRock, which is the same thing, and then BMO, all of those. And then so now he's pretty much he's pretty much gone onto the covered call hype train of sorts. You could
Mhm.
say it like as that. So
Yeah.
now he has pretty much built up a little rapport about, I would say, based on, he's a little bit vague in terms of like his overall portfolio size, but I would probably estimate about anywhere between 2 to 5% that he's now dabbling into covered calls. So he has, from his last report, he's pretty much allocated about $200,000, give or take, to just testing it out and then building it
Right,
up and
right.
coming.
That makes sense, that makes sense. Yeah, I mean, even with my channel initially started as mostly stocks.
Hmm.
But for some reason, even though I was mostly a stock channel, I was
Hmm.
picking up a good part of the covered call audience. And it got to a point that the writing kind of was on the wall, when it came to what my audience wants.
Hmm.
So I put out a video on stocks, I get an average number of hits, of views.
Hmm.
I put out a covered call or an income focused video, double, triple, sometimes even quadruple the views. And
Mm.
I was just like,
Okay.
"Okay, this is what my core audience." My core audience somehow they decided to become, I don't know if they started at stocks and then they evolved, because obviously there wasn't a lot of covered call options when my channel started.
Mhm.
Basically, income-wise, when my channel started, you had, I think BMO had a covered call fund. There were a couple of others, but mostly if you were going into income, you were looking at Split Core and you were looking at Canoe. That was about it. And that kind of makes sense. My first big breakout video was
Was
actually a
Canoe,
deep
right?
dive on Canoe.
Yeah.
And I think that's where a lot of my fans, my
Your
subscribers,
fan base. You can call it as your fan base. Yeah.
they came in through the Canoe videos. And it got to the point, like, Canoe videos did so well that I
Mhm.
was doing a Canoe video every couple of months, just because, they were bringing in subscribers, they were bringing in people. And yeah, I think that's where that core income-focused investor sort of came into the channel. Now, at the same time, the overall market was changing. Investors as a whole were changing. They were starting to move slowly at first away from stocks, more towards ETFs. The popularity of ETFs has been getting bigger and bigger and bigger.
100%.
Now we're at a point where, especially especially with a market that is as volatile as can be, thanks to
You know who?
the orange pumpkin head to the south.
Yeah, we can't. Yeah, because of the YouTube algorithm, we can't actually say who it is. But if you follow politics, you pretty much know who we're
Yeah,
referring to.
exactly. But yeah, so Mr. Pumpkinhead has made things more
That's a good way to
interesting.
say it.
And that volatility has made people sort of say, it's really hard to
It
pick
is.
individual stocks now. So they're seeking out that safety in ETFs. And of course, once you get into ETFs, you start to discover things like covered call ETFs. You start to discover income. Now, the fact that we're in a strong bull market, that's helping, because a lot of these covered call ETFs are picking up value in addition to the income.
Mm-hmm.
And people are looking at that. Now, how are they gonna react? Some of the newer people, how are they gonna react when we do go into a bear market? And ETFs, I mean, the premiums do well in a bear market, but some people will look at that volume and see that see that their fund is in the red, even though they may not even be in the red when you look at it from a total return perspective, because of all of the
100%. Yeah.
income coming in. So it'll be interesting to see how that goes. And obviously, I do a lot of live streams, so I'm gonna hear a lot of questions about it as we do move into a bear market, whenever it happens. Like, I'll admit, I thought we would be in a bear market by now, but we're not. I actually saw, I saw an interesting video earlier today by an American comedian, actually,
Okay.
who was going on about an AI bubble, and he was saying that the only reason we're not in a recession, the US, in that case, the only reason the US is not in a recession is that the whole AI bubble has been propping the whole thing up. And it kind of,
Okay.
in a way, yes. I mean, you look at the market caps of the Magnificent Seven on the S&P 500, it's huge. And as AI continues to keep on, you know, pumping money, and there's a lot of money being pumped around in between the companies as well. It's kind of it's almost like a spider web between the companies, where you can sit all of the different companies at different parts of the spider webs. That's how interconnected everything is, and how
Mm-hmm.
interconnected all the finances in there. So
Oh, for sure.
it could be very interesting. So we'll have to see how this is going to look. I think we have a bear market coming. I think we have a recession coming, but will we get it? Will we get it in 2026? I'm gonna say we are, but, I said the same thing with 2025. I really thought we would have it by this time.
Well, we had a little dip back during Liberation Week, but just as soon as it came, it rebounded and more. And
Exactly.
so, what would you even call that at that point?
That was nothing more than a fear spike.
Okay.
Yeah, I mean, if you get a dip like that where it just goes down and comes back up, that's 100% people's emotions
Hmm.
getting all worried, getting, you know, a and, as they get worried, they start to sell things.
Yeah. That panic
And
sell just
that's
kicks
all
in
that
right into
was.
place.
Yeah, that's all that was. Now, if it goes down and it stays down
Hmm.
and it continues to go down further, that's usually signs of something deeper, something more than just a quick emotion
Hmm.
emotional flux. It's more than an emotional flux in that case.
Okay. So, in terms, are you more, let's go basically into the investor mindset since we brought up the topic of ETFs and stocks. In terms of or your own portfolio, how are you split in between stock picking and basically indexing and whereas with ETFs and all that?
I consider myself to be a growth income investor. So that's your
Okay.
hybrid. So growth income basically means you've got a little bit of growth, you got a little bit of high income, and then you've got
Mm-hmm.
some stocks that sort of sit in the middle,
Okay.
stocks or ETFs. In this case here, yeah, I am moving a little more towards ETFs, but I got a fair number of stocks at the same time as well. And it's an interesting thing, and it's kind of where I see my channel. For example, I kind of want the channel's main theme to be almost that hybrid investing,
Yes.
sort of being that bridge between both sides. Now, mind you, that will it's an interesting place. It's going to be one of those things where I think both sides will be able to relate to a certain extent, but I'll also
Mm-hmm.
get the critics from both sides too, because you'll have some pure income investors who are just like, "Why are you doing that? Just come over here, come over." And I'll get those other people saying, "Oh my God, some of that stuff you're doing is really risky. Those covered calls are going to get you." So, yeah, and I think on Blossom, like I think the core of Blossom tend to be more, more of your dividend growth.
100%. Yeah. Because mostly for that longer track record. So because of that, they're kind of basically following the main script because there is a track record technically. So you have all of those projections in place that you can technically follow. You're like, oh, this happened in the past. Maybe it'll do it again. And so they're pretty much playing along with the fact that, oh, maybe just because it's how it's behaved in historical manners, maybe it will continue. But I think there's a part where I don't know if you want to touch on this, but now there's a sort of like a paradigm shift that, in the sense that the markets today are very different in terms of the markets back even like 20 years ago. What did you want to comment anything on that?
They are and they're not at the same time.
Okay.
They are different because of obviously the ETF. So ETFs have basically phased out, for the most part, mutual funds. Mutual funds, nobody's investing in mutual funds anymore unless you're using a financial advisor.
Yeah. That's
Financial
still
advisors
big.
love mutual funds because, well, whichever company or bank they're working for, those mutual funds have higher fees and
Hmm.
their company's making money from them.
Those commissions, that's the number
Yeah.
one
So,
thing.
I mean, the market itself. So the players have changed. But here's where the no part come in. Overall, I think the market's still the same market. Like I think things still work in the same way.
Hmm.
But I think in many ways it feels like, things are a little bit more intense than they used to be for sure.
Hmm.
So some of our bull markets are pretty strong, like this bull market right now. It's kinda crazy, and, that's one of the reasons there's a lot of people out there that are like, "It is going to crash. It is time to start putting my money in, taking my stuff out of the stock market, putting it into the money." Well, there can't be that many of those people, though, because if a lot of people were thinking that, that would impact the stock market. We'd see a price correction. We're not seeing that. Everything is still going higher and higher. And the other big comment I like to hear is I don't like to hear it, but I hear it a lot is people talking about before the Great Depression.
Mm.
Everybody,
Okay.
even the taxi drivers, were talking about stocks to you
Mm.
because it was on everybody seeing, everybody was making money. Everything
Right,
was
right,
great.
right.
I don't see that as being what's happening today. Like, honestly, I don't think governments would ever allow a depression to happen.
Hmm.
Even if it's a matter of just keep continuing to kick the can down the road, governments are good
Hmm.
at that, and they've
Yeah.
shown they can maintain that. And, heck, 10 years ago, people said there's no way they can do this for another 10 years. Well, they have. If you think today, there's no way the government can keep kicking the can down the road for another 10 years. Well, yes, they can. And they will. It's just that thing. I don't think any government is going to allow it to get that bad. They will pull out whatever tricks they have to. And, I think it'll work. I think it'll probably work. So we'll get recessions. Will we get a depression? I don't think we'll ever see a depression again. Not unless something absolutely like I think like if somebody were to like if a foreign power to actually land troops in the US,
Hmm.
we might get a depression. It would take something big and absolutely devastating, I think, to create that type of hardship again. And I'm not saying it's going to be easy. Like a lot of people with the tariffs, a lot of people are going to be struggling, both
100%.
sides of the border, and they're already struggling. But yeah, well, we won't get another depression. But I guess going back to your question, is the market different from 20 years ago? The composition is different, but the mechanisms are still the same. There's some differences, like the big difference I think right now is the when it comes actually, my mind has
Fundamental
gone blank
analysis,
on me.
like
What's that?
fundamental and technical analysis.
No, no,
Is that still the same?
I was actually thinking of settlement.
Settlements?
Yeah, when it comes to settling. So when you make a trade,
Oh, okay.
all right, it used to take 3 days to settle, so it was a
Right.
T
Oh,
plus
okay.
3.
That kind of settlements. Okay.
That's
Yeah.
changed now to T plus 1, and there's even
That's
movement,
crazy. Yeah.
I think it's India. India wants to go to a same day
That's
instead of a T plus
crazy.
0 or T plus
Do you
1.
think that's hopple? Do you think that's possible to do?
Uh, yeah, there's no reason we can't. Not with the I mean, with, computers, with the internet, everything is instantaneous.
True.
The reason that we had a T plus 3, and it used to be even longer than that, was back in the days of paper trading, you actually had to move those certificates,
Right.
from one party to another, and that
Hmm.
took time to do it, whether it be through mail or usually not so much mail, usually, a courier or something like that, and if you go far enough back, it used to be done by horse and carriage. So that's kind of that thing. Now everything is electronic. We don't really need that time. So I think settlement could happen a lot faster.
100%. So, for those part of the audience that are not too aware in terms of differences, do you just want to touch on the fact, like any sort of minute or technical differences between a recession and a depression? Just want to highlight some of those differences and what does it actually mean to be in either or?
Well, okay. So a recession, generally with a recession, you've got a certain, and I don't know the thresholds off the top of my head. So I
That's okay.
apologize for that. But
And we're not
there's
gonna
a
do. We're
couple,
not. This is not too technical, so
yeah,
there's no
there's a
fact
couple of
checking. There
criteria
you
though.
go.
For example, to be in a technical recession, you need GDP to be negative for 2 quarters in a row.
Hmm.
That would put you in a technical recession. That doesn't mean you're in a recession, though, because there is a reporting agency, and each country has one. Canada has one. The United States have one. They have to declare that it's a recession.
Right. Yeah.
Now, in the past, whenever there's been a recession in the US, one has happened in Canada at the same time. So that's just something to keep in mind. So we do
Hmm.
tend to be very tightly interwoven, but maybe we're not as interwoven anymore now that a lot of our ties are kind of breaking. But yeah, so that's how we get into a recession. Now, a depression is take a recession and make it worse, basically, in a nutshell. You're going to have higher thresholds of unemployment. There's going to be a lot more unemployment.
How many? What's that threshold? Are we looking like 30 to 50%, or is that way too high?
It's in that vicinity. Like I said, I don't know the number off the top of my head because I didn't realize we'd be talking about depressions.
You brought it up in the first place, so
I
let's
know, and
touch
this
on
is a
it.
depression that a lot of times when you do get into into a depression, and we've only really got one to look at,
Hmm.
they're a lot harder to get out of. In fact, the only way we got out of the last depression was because of World War II, because the buildup to World War II saw Germany starting to pump a ton of money into, well, weapons and tanks and planes and
Hmm.
munitions. And that stimulated the economy. And then other countries, when they started seeing this, started doing similar things. As there was the buildup to all of what became World War II, that that pulled the world out of that recession. And then, of course, we went into a war. Hopefully, that's not the case if we go into another, but I don't think we will go into a depression. You may hear some fear mongers, like there'll be some YouTubers out there that will be like, particularly not Canadian ones. I'm going to say the American ones. They tend to be much more sensationalistic, but there'll be some YouTubers out there that'll be like, "Oh my God, we're heading for a depression." Well, no, we're not. We're
Mm-hmm.
really not. And a recession, there's nothing wrong with a recession. It is a part of the business cycle. So it is, we go from good times to bad times. It's just kind of that whole thing. You can't maintain, a high flying economy. You just can't do it.
Yeah.
You have to have times where you just take a breath. And think of it this way, taking a breath is that little recession. And for the most part, recessions tend to be a lot shorter, than the good times, than our non-recessionary times. So kind of the same way with a bear and a bull market. Bear markets are short, bull markets are long.
I think that's very like important perspective for investors to keep in mind is to think about the big picture long term and not just focus too much on the day-to-day of movements because as soon as you zoom out, any chart looking at the long term, which is use the S&P 500 for an example, it's always been going up. And so what do you think about those kind of like market predictions where they basically cause some sort of fear where they're all constantly saying, oh, the S&P 500, it's basically hit its peak. There's no more, like those past overall returns of basically 12 to 15% that we've seen in the past 30 years, give or take. That it's hit its peak. There's no more, there's no point of going higher. So what do you think? Do you think there's any kind of sort of truth in what they're sort of predicting, or is it they're just fear mongering in terms of just to get the clicks and engagement from
Let me
from
give you one
audience?
piece of perspective. If you had a company that was worth,
Mm-hmm.
let's just say the S&P 500 was one company.
Okay.
That
S&P
company
one.
is worth, that company's worth $10.
Okay.
All right. What's the inflation rate? About 2%.
Okay. Yeah.
So the following year, that company, even if it makes no progress and stays at the same value, it's
They
not
lost money.
$10 anymore.
Yeah.
It's now $10.10, or sorry, $10.02, because if we're talking 2%.
Yeah. 2%. Yeah.
So even if that company stays the same value, as you track that over time, it is going to go up. It's not going up a lot, but it is going up. It will always have brand new all-time highs every single time without
Yeah.
any growth. Now, let's look at the actual stock market. So the stock market, you have to take a whole bunch of things into consideration. You got inflation. So even if every company in the world stood still, inflation's still going to push it up. And it's not always 2%. I mean, look at last year when it was up at like 8% for briefly. So that's going to push things up, but everything is growing. The world population is still growing.
Mm-hmm.
So as such, there's going to be more need for demand. So there's going to be more demand for everything that we need. Everything from power to electricity to iPads. I mean,
Yeah.
it's just going to keep on continuing, and that's going to push the market up. Yes, we will have moments where we'll get retracements. That's a normal part. That's a healthy part of the market.
Mm-hmm.
But
Yeah.
when you look at the S&P 500, if you look at it over the last 10 years, you'll see that that's all it is. All-time high, all-time high, all-time high, all-time high, all-time high, slight retracement. Oh, back to an all-time high, all-time high, all-time high. It's a broken record, but that's all it is. All-time
Yeah.
high on all-time high. And so, yeah, is it going to go up forever? Well, no, because, in a few billion years, the sun's going to expand and destroy the earth. So, no, it's not going up forever.
It's not infinity, but yeah.
But, I don't expect I expect it to continue going up for the rest of my life. I expect it to go up for the rest of your life, which should hopefully be longer as long as you can keep your head protected.
Fair enough. Fair enough. Hopefully that remains the case. But then, do you think is there any sort of truth? So we know for a fact that it will keep going up because inflation rates. I mean, there's never going to be really deflation, but then hopefully. But so when we're just talking about inflation, do you think that there is any sort of truth in the matter that will they still reach those 10 to 15% returns annualized per year? Or would it pretty much start peaking down little by little by little?
The
And
average return on the S&P 500 is closer to somewhere between 7 and 8%. That's based over its life.
that's I would say that's about real return. Like we're not factoring in inflation. So that's more like around 10 to 12%, give or take.
You can argue, and that's the
Yeah.
thing. I don't even care what the number is. The key thing is whatever the average return is on the S&P 500,
Yeah.
that's what you can expect over a longer period of time.
Right.
There's going to be a lot of volatility in between. So when we go into a bear market, yeah, you're going to have less money the following year, but it comes down to how you handle it. So for example, our last bear market, it began just at the end of 2001. And the interesting thing with that one is technology went first. So technology fell towards the end of 2001, and then by January, everything else came crashing down.
Mm,
Now, here's that thing. If you had been buying during all of the all-time highs in November of 2001, everything looked great. All of the financial shows, you could watch them and it's like new all-time high today. New all-time high today.
hmm.
That was kind of like
Broken
that
record.
was on repeat.
Yeah.
And if you had bought and if you had just learned about the stock market, and a lot of people had because of that pandemic, the pandemic it didn't force people, but it gave people a lot of extra money because of supports. And a lot of that money, well, found its way to the stock market. A lot of it did. So some of the strength of that bull market coming out of the pandemic was all of the supports. People are in lockdown, or they're not going anywhere. They've got nowhere to spend their money. They got two places to spend it. They could discover investing, and a lot of people did.
Hmm.
Or, of course, there was Amazon.
Yeah.
Amazon got very busy for sure.
Oh, yeah. Oh, yeah.
And as that money hit the market, there's a lot of people who were brand new to investing. They were all happy as can be, and then we went into a bear market.
Hmm.
And a lot of those people did the wrong thing. A lot of those people panicked and sold at a loss as we went into that bear market. And that's not the way you want to handle a bear market. Ideally, when we do go into the next bear market, your best bet is to buy, not to sell,
Hmm.
because you're going to be averaging down your adjusted cost base. So that's your average price on your stocks or your ETFs. You're going to average down. If you're an income investor with those covered calls, it means that you're getting a bigger yield, because as that price goes down, yield is a function. It's a function of, well, the price.
Yes.
The price and the dividend. That's if you look at your total dividend in a year, you can work out what that yield is. So as that price comes down, you're basically, you're basically changing you're changing the math, making that yield bigger. So, when all of a sudden a 12% yield in a bear market, it might be a 14% yield. It might be a 15% yield. It's not like when the market recovers, you lose that 15%. Sure, the number goes back to 12% on the other side, but the money you put in is still making a 15% return.
Yes. 100%.
And that's that thing. Yes, it'll look like 12, but it's technically 15 only on the money that you did spend during that time. Everything else you spend, of course, is probably 12%. But so that's the thing. You can really sort of, you can really get a good bang for your buck when it comes to income. Or if you're a growth investor, that's the time to be buying your favorite stocks when they're down. Imagine people who bought Nvidia back in the last bear market.
Hmm.
They're very happy right now.
Very, very.
Yeah.
So, in terms of what are your some, let's go into some of your favorite picks. What are some of your favorite stocks that you would like to dabble into, and some of your favorite ETFs?
All right. We'll start with stocks. I have a few favorite ones. I'm a big fan, of course, of a couple. There's a couple. There's two. I'll give you two. One of them, of course, is Hammond Manufacturing.
Hmm.
HMM.A. I love this stock.
You still love it, huh?
I do. And actually, they're up. They're up quite a bit right now. They're up
Okay.
about, I can't remember exactly how high, but they're in the double digits. So one of the things I like about Hammond is with Hammond Manufacturing, there's two. The Hammond company, they've got Hammond Power Solutions and Hammond Manufacturing. They're both basically run by the same family. But what they do is they basically transformers, power enclosures,
Hmm.
data center racks, all of that stuff. That's their bread and butter. They have more they have more clients than they can even handle. So they've got too many customers. There's a high demand for their services. As we move into data centers, there's going to be an even higher demand for their services. So they're looking good. And they also work not just in North America but also India.
Mm,
India, there's a
okay.
huge
Influx.
push on infrastructure in India because India just became the world's most populous country. So because of that, they want to really pump that economy and they need the infrastructure to do it. And Hammond's in a beautiful spot for that. Yeah, Hammond has had some ups and had some downs, but for the most part, I think Hammond has a really bright future ahead of them.
Okay.
All right, my second stock.
So I just took a look at the price. So since 6 months ago, it is up 32.9%, or
There you go. I
and
told
with
you
a
it was double
current stock
digits.
price of 10.30. So it actually did hit double digits in terms of
Yeah.
stock price.
Well, I was talking double digits returns.
That too. Yeah.
Yeah, so there is that. Now, here's the other thing. The other company is Bird Construction.
Mm,
So BDT. I love Bird Construction for many reasons. They are, of course, a Canadian construction company. They have their fingers in everything. I mean, literally everything. And they do a lot of infrastructure projects that are given by the government. Yes, they have to bid to get it, but they know the system very well, and they're very good at securing those projects. So with, of course, the whole one Canadian economy and that whole stress towards building, Bird is going to be there. Bird will be a contender all the way through. In fact, just recently they acquired another company, a marine, so sort of a marine infrastructure company. And if you look at their chart, you'll
hmm.
see that there was a recent big jump in the price. That was because of that acquisition, and they're they're going to be fantastic. They're going to be absolutely on fire. So give them. They're going to be. Are they a slow burn? Well, they're already doing really well. I think they're gonna, but I do think that they could have some really big growth ahead of them. So Bird Construction, I do love that one. All right, covered calls now.
So you only
Switching over to
have, do you only have two, or do you currently hold these two holdings in your portfolio?
yeah, and I have them both in my 0 to 100K challenge as well.
Mm-hmm.
But yeah, those are two, and of course, well, there's also Canoe. I do love Canoe as well. Canoe, new EIT income fund. So
Mm-hmm.
it's like an ETF, but it's technically not. It's probably closer related to something along the lines of like a Brookfield Asset Management. So they do manage a bunch of companies underneath of them. There's
For
a
sure.
good financial. They have a lot of financial and energy exposure in there. They have a nice dividend, 10 cents a month. So that's not too shabby. It works out to about a 8 to 9% yield, depending on where their price is.
Yeah.
They've been very reliable. This is a stock that has been paying 10 cents a month for a long time. So I do like Canoe as well. They're definitely one of my favorites. And it's a stock that even, I can get better income with some of the cover call funds today, but
For sure.
I just like that reliability. And it does tend to stay in the green as well. So that makes me feel good on the hybrid side as well. Looking at covered calls, I got a few different favorites. I've really come to like HYLD quite a bit.
Mm-hmm. One of the top picks for sure.
HYLD, of course, is a Hamilton one. They invest in mostly U.S. equities. They do have a little bit of Canadian exposure because one of the things they hold is RMAX, which is the Hamilton REIT maximizer, and RMAX holds 50% Canadian REITs, 50% U.S. REITs. So
Mm-hmm.
there's just to give you an idea of where some of that Canadian exposure comes from. And this is a good. This has been a good ETF. Now, when they initially launched, they did not have any of their own ETFs in it. It was
Mm-hmm.
all American ETFs. So that didn't give them a lot of control. It wasn't my favorite fund back then. I will say this, but Hamilton did the right thing. They reeled things in. They've added their own slew, and now part of it is that they didn't have them at the time. Now they do. So now they have a lot more control over it, and it's been doing really, really well. And technically, I know my latest video on them, I called them 2.0, and Adriano said, no, 3.0. You could argue that they're now 3.0 because now they've removed a few of their bond
Yeah, they
ETFs,
removed
and they
all of
have
their
brought
bond
in,
exposure.
yeah, they brought in Daymax. So two of the Daymax. So yeah, that to me, that's another exciting point in when it comes to HYLD. So I love HYLD,
Hmm.
HIS. So that's your Harvest High Income Shares. I
For
love this
sure.
one.
Yeah.
I'm, of course, a huge fan of tech. And well, I used to work in tech, so I love tech. This here, it's a good diversified exposure. Um, I think it's going to do fine. Even if we get another tech crash, I think sure the share price or the unit price will go down, but I think the dividends will be fine. There's a lot of volatility in tech, and that excuse me, that feeds very well into premiums of covered calls. So I think that's a fantastic one. On the Canadian side, this one just launched, HHIC. I'm loving it. It's got a lot of good Canadian companies in it. Now, I don't think it'll ever have the same level of volatility as what we're getting through the HHIS funds,
Hmm.
but I think it's a good. I think it's still a good Canadian exposure right there. So I am liking that. Now another one I'm starting to like a lot too, HBTE. Now
Yes.
this here is your Bitcoin leaders ETF. So you got
Hmm.
covered calls, and you got a lot of companies associated with Bitcoin. Now one of the nice things about this is we all know Bitcoin has a lot of volatility. Fantastic, but when
Hmm.
you look at short-term volatility, it's not reflecting as much in this fund. And the reason for that is that, well, it's not just holding Bitcoin, it's holding miners, it's holding different companies that have good exposure to Bitcoin. And for that reason, sometimes that volatility, if it's a short term, it may not impact some of these companies so much. And as a result, that's giving a
Hmm.
little bit more stability to this ETF. And oh boy, it's been on fire since it launched. If you got in when HBTE first launched, you'd be up a good 80%.
So out of those top four holdings, which one would you say is your number one pick?
Out of all of them.
No, I would say let's keep it between stocks. Let's do a number one favorite on the cover call
Okay.
side and a number one favorite on the stock side.
On the stock side, I love Hammond, but I would give it to Bird Construction.
Okay. Why is that?
Just because like I mentioned before, they just bought a marine
Hmm.
infrastructure company. They're poising themselves to be in a really good spot. So I think Hammond is in a good spot already, and I think Hammond has already seen a lot of that big growth.
Hmm.
I think Bird is yet to see their really big growth. So I think for that reason, I think potential wise, I love them both, but I think potential, if we look out 5 years from now, I think Bird will have a bigger total return over the next 5 years than Hammond will. And Hammond will have a good one, but I think Bird will have a better. They'll fly higher.
Okay.
No pun intended.
That's a good one.
Uh-huh. Now with the ETFs, diversification is king. So as much as I love HHIS, but between HHIS and HYLD,
You mean
HYLD just has that
HHIC?
better diversification. So for that reason, I would probably go with HYLD over HHIS if I had to. If I had to.
Okay.
Luckily, we're in a world where I don't have to. But yeah, I would say HYLD right now, but it's close. It is close. HHIS is a very close second.
Very, very interesting. So,
Yes.
in terms of that portfolio allocation, especially for, I would say, because covered call ETFs in general has been booming so far, what kind of advice would you pretty much give to those who are starting out? And how would you basically navigate the current landscape?
All right. I'll give you a piece of advice here. So if you're brand new to cover calls, remember what cover calls are designed for. They're designed for income.
Hmm.
They're not designed for growth. So when you're looking at a cover call, whether it be red or green, that's irrelevant to the actual design and function of that covered call. That covered call wants to basically utilize volatility of the underlying assets to create premiums. So those are fees that they charge for the people who are buying the premiums are, or sorry, the options on those on the underlying assets.
Yeah.
So sometimes a little bit of a red, a red on your ticker price wise is not always a bad thing. So it's one of those things where you want to be careful. Like right now, where you're coming in where the market is doing so well, all the underlying assets are doing so well. You got you got some of these cover call ETFs. Like take a look at HDIV. HDIV is absolutely exploding.
Mm-hmm.
And you'll look at it and you'll think, oh my God, this is a great growth covered call. Well, it isn't designed to be a growth covered call. It's designed to produce the income if there's growth. And a lot of times there is, depend if the markets are good. It's icing on the cake. So look at that as being icing on the cake. And you can see that from a few different ones. Like HDIV has been doing really well. Bank from Evolve doing really well. And, they're not always going to do really well. They're not always like, a lot of times a cover call ETF may go with very small share price increases, but
Mm-hmm.
you're getting that income. So you always want to look when you're measuring these things, don't measure them by the price on the share, measure them on your total return. So look at what you're doing. Look at the share price. If the share price is going up, sure. How much is it going up by? Is it going up by 5%? And then are you getting a 15% dividend? Well, if that's the case, you're probably up about 20%. Still do the math,
Yes.
though. Don't just sort of add them together. You want to do the math.
Mm-hmm.
If it's down 5% and you got that 15% dividend, well, then you're technically up about 10%. Deep red will pull you back a little bit, but always look at red under a wider spectrum. Don't just sort of look at it individually. So, for example, if the entire market is falling and your covered calls are in the red, duh, it's doing what the market's doing. You
Yeah.
know, that's that's the way it works.
Yeah, exactly. You're
Pay
still
attention
tied
to
to the
that. Pay
underlying.
attention. Now, conversely, if the market's flying off the shelf and your covered call is diving, then you got more questions to ask. Then you might want to take a look and reconsider whether or not you're in the right fund. You may not
Mm-hmm.
be, but you may be. It depends on what it is. You want to, that's why I'm saying don't just drop it, but maybe just take a hard look, see if you can find out why it's happening, and then go from there.
Yes. So, what do you think in terms of getting into covered calls? What do you think about the age bracket in terms of like what kind of investors are they good and suited for? Because keeping in mind that I would say there's a huge different mixture of different strategies, even in the cover call space. So, what kind of investor mindset and investor age bracket do you think that cover calls would fit in one's sort of overall portfolio allocation?
That's a good question. If you had asked me this question 4 years ago,
Mm-hmm.
I would have said they're for people
Retirees?
retiring.
Yeah,
Retirees, building that income when you retire. And they absolutely are. Like, if you need income in retirement, there's nothing like having a TFSA full of covered calls,
100%.
just generating some half decent tax free income.
Mm-hmm.
Perfect. Now, I think the way I would have structured it 4 years ago is you just start investing your dividend growth all the way. You're building up you know, you're getting your maximum growth for your buck. And then as you get older, you start to diversify a bit more in towards a bit of income, into more of that hybrid position. Then you move into income when you're older. That was what I would have said then. Now we're at a point where there's a lot more options when it comes to, and I don't mean options as in covered call options. There's a lot more choices. Covered
Yeah,
calls now are being catered to, and they're being marketed to all ages. They're not being marketed solely anymore to retirees, people
100%. Yeah.
on that edge. So you kind of have to look at it this way. If you are a very conservative investor and you don't have a high risk profile and you got a long runway ahead of you, there's nothing wrong with taking the growth dividend route. Nothing wrong at all. And that can be very profitable. However, if you do want a little bit of income, and there's definitely some good cases for income, I think a hybrid approach is the best way to go. Have some of your growth stocks, some of your good growth stocks, because what that's going to do is if you've got some, like, imagine if you got in on Nvidia, like even 3 years ago, if you had that in your TFSA, that expands from there and then turned it into income stocks down the road, you're
Yeah,
gonna have room for a lot more income stocks because of that. So you kinda have to look at the market. You have to look at what your personal needs are. And I think
for
it's
sure. Yeah.
very I think it's to the point now where it's very individualistic. I don't think any 2 profiles or any 2 portfolios should be the same. There's no such thing as a cookie cutter portfolio.
Mm-hmm.
That those days are gone. They need to be individualized to your own needs.
Mm-hmm.
And if you've got a financial advisor, maybe they're good, maybe they're not. But you want to make sure that if you are dealing with an advisor, that they're listening to what you want and
100%. Yeah.
not
What they
feeding you
want.
what they want.
Exactly.
That's a big thing, and a lot of them will do it. But I don't wanna there are some independent ones that don't work for banks that are probably really good. There's probably even some really good ones that work for banks too. So I don't wanna
Mm-hmm.
discourage all financial advisors. I think in some cases they can be fantastic, absolutely. And you also got, in many cases too, you also got robo-advisors too. So there's AI out there that will advise you as well. Now, I don't recommend sitting at your computer and going up and say, "Hey, ChatGPT, can you build my portfolio for me?"
Yeah.
It's not there yet. It's not there yet.
It could be
It
maybe in the
could
near
be down the
future.
road, but it's
Yeah.
not there yet
At the current moment.
because,
Yeah.
next thing you know, if ChatGPT has a hallucination or Grok or, any of them, Gemini, it's it
For
could
sure.
be
So the list
cost
goes
you
on.
money. It could
Yeah.
cost you money for sure. I think it's very idealistic, and it's very important that you basically look at what will suit you. So you take somebody young, like I don't know, like JJ.
Me or
If the
another
income,
JJ?
what's that?
Me or another JJ?
No, you.
Okay.
Yeah, you
Okay.
or J. Jonah Jameson. No, we'll go with you. Yeah, no, I mean, you look. JJ loves the income. It works for him. He's And keep in mind too, I don't know if people know your net worth, but you're not in bad shape. He's not in bad shape at all. And he's got the room to do what he wants. And I think the income is absolutely fine. And here's the thing, you can have a good solid income portfolio
Mm-hmm.
and a growth. I mean, I think hybrid I think is the best way to go personally,
Mm-hmm.
but if you want to go 100% growth, you can certainly do it. Adriano does that. He's not
Yes.
that old, and he's doing very, very
He's
well.
turning 40 this year, I think.
Exactly. Well, there you go. That's not that bad. And he's doing very well with his income portfolio. The big thing is though, whichever whichever route you choose, whether it be income, whether it be hybrid, whether it be dividend growth, learn about that income. Learn about the income. Learn about that
Ticker.
strategy and
Yeah.
stay true to what you're doing.
Mm-hmm.
Have a plan, and it will work out. You can be completely successful with each and every one. There's no one correct path to investing.
Exactly. Yeah.
There's many. There's many.
Yeah. I would say it definitely a big point to keep in mind is that even though all of us technically have our portfolios, pretty much, well, at least in my case, and a bunch of others in the influencer space, especially on Blossom, we have pretty much most, if not all, of our portfolios like pretty much open and visible on Blossom that you can follow along with. And but I think a big part where people need to realize that each individual holding in that portfolio and each individual strategy, it fits well for that person's needs. So everybody has a different risk tolerance, risk preference, a different investor mindset and timeline that needs to fit with their own strategy. So even though all of that is there and you can follow along with it, but you have to keep in mind that your each individual investor's pathway to wealth building, to financial freedom, and everything else, they're all tailored differently. So it's important to not only just follow along and to kind of build a rapport of whoever you're following on the on the Blossom platform and on YouTube, it's very important to keep in mind that you need to also realize what your own investing strategy falls along that growth hybrid income spectrum and stick with it. And so whatever keeps you in the markets long term, that consistency, I would say, is number one. Consistency is key. And that also keeps in mind that keeps one in check to not make any irrational moves if there's any sort of like huge market spike or market correction.
Yeah, absolutely. No, consistency is king when it comes to
Yeah.
investing
There is no
and having
secret
a plan.
sauce.
Having a plan.
Yes.
The markets aren't always going to be good. You know what you're going to do ahead of time before the market crashes. That way there, if you have a plan, you're less apt to do something silly like say the sky is falling, I'm gonna sell everything.
Yeah, exactly.
You know, have a plan. Absolutely.
So I don't know if you've noticed, but especially on Blossom to this day, there's always that huge debate between the pure growth enthusiasts bashing against the basically any kind of cover call ATF. And there's always that never ending argument that keeps funneling in with itself. And so, what do you think? Do you have any sort of opinion on that, basically, on never ending arguments per
I
se?
mean, here's the funny thing, and I guess probably being in the middle, I can see this, is that
Hmm.
both sides are right. Both sides are right. They're both arguing correct points.
Right.
But but
What's
they're
the
sort of
issue then?
stopping. They're not looking at the other side.
Right.
Yeah, when you come in, you look so from somebody who's a purist when it comes to growth dividend, they're arguing. We're saying, yeah, well, you know what? We're not losing our upside potential. Over time, you will make more money
Hmm.
with dividend growth. That's 100% true. Yes, that is true. That's not the thing is when you look at an income investor, they know they're losing upside potential, but that's the price that they're willing to pay to get that income now. And that income maybe if you're using leverage as well,
Hmm.
you may not be that far behind. And I
Exactly.
know BMO is now looking at something called an ETF spread, sorry, a covered call spread.
Very interesting.
The covered call spread, it writes 2 sets of options on each fund. So your
Okay.
typical covered call, and then it also buys an option as well. I think I don't know if it's buying along, it might be buying along or something like that.
Hmm.
But the object of it is that if the potential gets capped, this other option will make more money. And that
Very
will bring
interesting.
that in and basically help them mitigate the loss of upside potential. Will they get
Right.
100% back? No, but they'll get closer. That's kind of the whole idea. Now, if this catches on and it works, it's a pretty new fund. The one that I believe it's a gold ETF actually that
Uh,
BMO is
GDXF
using it
or
on.
something?
I can't remember exactly, but well, obviously it starts with a Z. But yeah, they're doing it. If it works and it really brings in some pretty good returns, I would not be surprised to start seeing more of these starting to pop
Is it
up.
the ZWGD BMO cover call spread gold bullion ETF?
That's the
The
one.
new one?
Yep. Yeah, it was released this year,
Pretty
2025.
recently, yeah.
I think it was released in March. I don't know. I think. I'm not 100% sure. March seems to stick in my head, but anyway, it's it's an interesting idea. But the whole thing is, and pure income investors are kind of like, well, look at the income I'm getting. And even though they know
Yeah.
that they're losing some of that upside potential, they wanna kinda get stuck in that rut on, "Look at this income, this is great," while the other side is stuck in that same well, not the same rut, but the different rut saying, "You're losing upside potential, we're making more money, you're idiots." That's kind of the way they're going.
Yeah.
So, I think it's a situation where I think because covered calls are fairly new, so, last 3 years, like I mentioned before, there was next to none 3
Mhm.
years ago. Because they're fairly new, I think a lot of traditional investors who are used to the regular dividend growth, compound growth, all of that fun stuff,
Mhm. Yeah.
I think they don't understand them completely. So I think that's where we're getting that disconnect between the two sides. And instead of, this is how I handle it. If I don't understand another side, I go and learn about it.
Yeah.
That's the way to do it. Instead of
But I think the
beating,
problem is that they're even refusing to see that other perspective. So, what do you think is stopping that mental blockade in just learning every part of an argument? Because if that were the
well,
case, then it's way more easier to at least
yes, but you
understand.
gotta look at the world right now. Everything is so decisive,
Yeah.
divisive. There's a word. Everybody, people love picking a side
Yeah.
nowadays and arguing until the sun goes down. I mean, it's like nobody's willing to look at the other side anymore. People love to just pick one side. We see
And
this in
stick with it.
politics. We see this pretty much everywhere, but politics
Mm-hmm.
definitely. And I think it's kind of a symptom of that. It's just sort of a similar thing where people are just, my way's right. If you're not agreeing with my way, then
The highway?
well, and I'll tell you, here's a great example. So here's an AI example. I'm not going to mention the YouTuber, but there's a YouTuber that I used to watch from time to time.
Mm-hmm.
They came out with this video saying I'm against AI, and I've now decided that if you like AI, I no longer want to be your friend.
Okay.
And they were just that was their thing. That was their thing to everybody. And it's just like I was kind of like, okay, that's taking a very
Extreme side, basically.
extreme kind of separation. Like, and I mean, I listened to their arguments why. And I think this person's in the entertainment sector. And so their whole argument is that it's taking, it's violating copyright. It's,
Mm. Okay.
taking jobs away from voice actors and other things like this. And so that's kind of their argument. I understand their argument, and their argument's valid, but their conclusion isn't. That's the thing. You can have a valid case, but come up with a completely bonkers conclusion. Sort of like,
Mm-hmm. For sure, for sure. Yeah.
if you like AI, you are no longer my friend. That's crazy. I like AI. It's say it's I think AI, if you use it the right way, it can definitely be very helpful, and you can't kind of avoid it either. I mean, it's everywhere now.
Exactly.
And
Yeah.
here's the thing, most people, even before they knew it, have been using AI for a long time without knowing it. You can't, unless you want to go and build a cabin in the woods, that's probably going to be your only way that you can live AI free for now.
For now, you never know in the future, right?
For now. A robot Bigfoot shows up next month and builds a cabin next to yours. Who knows? I don't
That's
know.
it. Yeah.
But yeah.
The world today is nothing like the world yesterday. There's too much stuff going on. Let's just put it
Uh-huh.
that way in perspective.
Yeah, and the world today is a lot not like the world a few yesterdays ago. My
Mm.
yesterday.
Do you think, based on how, like, the world in which you've grew up with compared to the world today in 2025, do you think there is a good do you think the way it's trending towards, is that are there good signs, or is it going too extreme, and could there be like dire consequences per se?
Could there be dire consequences? There can always be dire consequences.
Yeah.
I mean, so yeah, like I'm Gen X. So
Okay.
my world as a kid, we did not have computers.
No computers at all, huh?
No
Okay.
computers, no
No cell
internet,
phones.
no cell phones.
Wow.
Our phones
Okay.
were on the wall, and you had to actually, when I was a kid, they
Like
used to be
the
rotary.
spinner ones.
Uh-huh. Yeah,
Okay,
yeah.
with the wire. Okay.
Yep. So yeah, there was none of that. Parents, especially for Gen X kids,
Mm-hmm.
they didn't care because our parents were the boomers. So pretty much they let us do whatever we wanted. They actually called us at one point, they called us the latchkey generation because boomers were going to work and they just, instead of getting babysitters and stuff, they just sort of let us do our own things after school.
Mm-hmm.
But yeah, no, I mean, the world was completely, completely different. Now, I'll tell you, the technologies that came along when I was a kid were things like the Walkman. I hope you know what a Walkman is, but
Is that like an iPod Touch of sorts?
it's basically it's a cassette recorder. It's
Okay.
yellow and it sits on your you can hook it on your belt, and then you got a little headphones you put on.
Huh? Okay.
So yeah, basically that. Eventually, we got the Discman after that when they switched from tapes to compact discs.
Okay. Okay. Okay.
And that was pretty much like computers themselves. They were out. Like, I mean, I took computer science in high school, like I mentioned, but not a lot of people owned computers. They're still pretty expensive. And some of those initial computers, give you an idea, like there's a thing called the VIC-20.
Perfect.
The VIC-20. So it didn't have a disc. You had to, it had a tape cassette. So when you wanted to save your work, it would save it onto a cassette tape, and then you could even listen to the tape, and it would be a whole bunch of beeps and hisses and sound. So you didn't have much stuff. But then again, the type of things that we were doing is like we were doing things like programming in BASIC.
Okay. What
So
language is
yeah,
that?
it's a language. Basically, it's very you do things like you'd number your lines, like you'd go 10. Uh, 10 print hello, 20
Okay.
go to 10. And then
Uh-huh.
you would execute it, and it would just keep putting hello down the whole screen because it would just keep going around in a circle.
Okay.
Yeah, so yeah, that's the type of thing that was out when I was a kid.
Mm-hmm.
And it's kind of interesting. People still bought records, like actual vinyl records, then as well. But very quickly, it's kind of funny. My very first music collection was records, vinyl records. But quite literally about a year after I started collecting it, everybody switched to cassette tapes. So then I built a collection of cassette tapes, and then came CDs. So things have been moving fast. And then from CDs
Do you think
came
too fast in any way?
not, I don't think a lot of people do. My grandfather, I mean, and he was alive in the Halifax explosion, just to give you a general idea, if
What
you
is
even
that?
know.
I don't know what that is
The
actually.
Halifax explosion. All right. So that was the biggest non-nuclear explosion the planet ever saw.
Okay.
So it was during World War One. One ship completely packed with explosives went into Halifax Harbor, and it collided
Mm-hmm.
with another ship, and it blew up and it destroyed the city
Oh, wow.
in a
Okay.
nutshell. That's why I said it was the biggest explosion, non-nuclear.
Do they know what exactly happened? Like what caused it?
Well,
My
in a
God.
nutshell, one of the ships, so I think it was the Mont Blanc, it was outside of the harbor, and it couldn't come in because they had the submarine nets across the harbor. So it had to sit outside all night. And the other ship, the Emu, it was, I think they were French. They wanted to get out, but they couldn't leave because the submarine nets closed because of the Germans. They had submarine nets, so subs could come in and blow things up in the harbor. So when the morning happened and they opened up the nets, the Emo started heading in, or sorry, the Mont Blanc started heading in, but the Emu, they were in a hurry. They didn't like the fact that they were stuck there all night, so
Mm-hmm.
they were going faster than the speed limit on the way out.
Mm-hmm.
And then at one point, an American ship was on the wrong side, and so the Emu moved over and put them on the wrong side. So
Oh
then they ended
no.
up
Okay.
colliding in the narrow part. And like this ship had more munitions, and it didn't have a flag to let people know that it was filled with explosives, because
Okay.
that would have made it a target of German submarines. So it caught fire. They had like a bunch of canisters of benzene on the deck, and they
Wow.
all went up in flames. And this thing had massive amount. So it exploded. The explosion was so big, it pushed the water out of the Halifax harbor, and the harbor then it came back as a tsunami, and it pretty much flattened tons of buildings and killed thousands of people. And so it was a massive, massive explosion.
Mm-hmm.
And then they immediately got hit with a blizzard after that. Well, people were still in the wreckage and stuff.
My God.
No, it was
Double
a kind of
whammy.
a three-part whammy.
Three parts, yeah.
Yeah, but it was a big thing. Now, Boston, Massachusetts, they actually were one of the first to get help in.
Mm-hmm.
So that's kind of an interesting thing. So now every year, Nova Scotia sends a giant Christmas tree to Boston. as a thank you for the help back then. But anyway, getting back to what we were talking about. See,
Yes,
tangent.
exactly.
My grandfather, so he was pretty old. Like back in the when the Walkmans came out, he was like
That
80 or
was the
something.
1980s, the Walkman?
Late 1980s.
Okay.
And I know he came over once, and my mom put a Walkman and put some music in it and put it on him, and he was just he was blown away.
Mhm.
This was like alien technology to him. But yeah, and it's kind of like, and it's kind of neat. So when I look at the technology we have today
Mhm.
and compare it to then, I'm beginning to understand this. Now, I don't mind the speed that things are going because I've always been a forward thinker. So I loved cell phones. I loved the internet. I
Mhm.
loved
Yeah.
computer, and I love AI. I mean, I'm just like, let's keep moving into the future. I mean, I
That's
know when
it,
I
yeah.
was a kid, I was told we'd have flying cars. We don't have
Where
flying cars, but at least we got the AI
Yeah,
that we were
exactly, yeah.
also told we would have as I was told as a kid by, watching sci-fi and stuff. So, yeah, it's good I'm okay with it, and I say keep it coming, keep it coming. I'll roll with whatever comes along, and I think there's a lot of really good, when we get past all of the window garbage of AI, like, people making stupid videos and all of that
There's
stuff.
too much of that on the internet at this point.
Well, there is, but behind the scenes, AI, for example, AI was able to help solve protein folding.
True. Yeah.
So, AI has so much potential for medicine, for science, that it's going to really help. It's going to help us develop things faster. And that's a good thing. Some people may not like change, but change is inevitable. It's a part of the world.
Yeah.
It's always
It's just
going
part
to
of
happen.
life.
It's the only constant in life is that there will be change.
Mhm.
And if it's change that at least is moving in the right direction. Now you say, is there danger? Of course, there's always danger. I mean, if we build AI, when we get AI to a point that AI is smarter than us, it could decide that we're the problem.
100%, yeah.
Absolutely. Will that happen? I don't think it will. Could it happen? Yes. But I'm skeptical on it actually happening. So I
Mhm.
think I think we're safe. And even then, before we get to an AI super intelligence, I know people like to talk about it. And a lot of times Elon Musk will come out and say, oh, we're in danger. It's going to happen sooner than later. I don't think it's going to happen as soon as people think. I think AI, though, will make leaps and bounds. But
Yeah.
before there's any danger, it's a long ways off. And trust me, don't, as much as people say there's no guardrails, I think there's more guardrails involved than we're aware of.
That's a very interesting point. So in terms of where it's headed, do you think at one point AI could become so automated and functional in the sense that it's no longer controlled by the humans using it? Do you think it could achieve some sort of
Yes,
sentiality?
absolutely.
Sentiousness, yeah.
I can see
Whatever
a
that term is
future.
called.
I can see a long-term future. So
Okay.
this isn't going to happen in the next 5 years, and probably not the next 10 years.
Mhm.
But I will say right now, 100 years from now, I believe we will have AI robots that will have the same rights as us.
Okay.
That it will be, and they'll probably have to fight for them too. Just like people people who are not white had to fight for rights. Women
Yeah.
had to fight for rights. Gay folks had to fight for rights. It's robots will have to fight for rights as well. But I do see it
Yeah.
happening. And I'll go another 100 years. I say 200 years from now,
Mhm.
people will be like, "What? You mean robots didn't have rights at one point?"
Yeah. Possibly, yeah.
Yeah. I mean, I think we'll be blended that way. And robots, yeah, will they be smart? Absolutely. But I don't see it getting to a point where they will run the world. They might run the world if they're elected.
Mhm.
I could see, who knows? Some year we might have a robot as a prime minister. Who knows? It could happen.
That could be something for sure.
I'll vote for him. Why not?
And that robot, if you think about it, because it's able to pull at that point, it's able to sort of connect like a central hub and be able to sort of mind read everybody's like willingness,
Well,
non-willingness,
perhaps.
their own thoughts and ideas, and you can kind of see of it as at that point it's gonna be like a blend and mixture of everybody. So you're kind of like a little piece of you
Well,
is
yeah, I know.
stored there.
Eventually, we'll get to a point as well that, humans will be so connected to technology that
Mm-hmm.
it'll be hard for there to be a lot of dissension. And I don't want to make it sound like, we're all being turned into some kind of hive or something, but
Yeah, for sure.
I think there'll just be more understanding. That'll be because it'll be just communication will get easier and easier. Like right now, what's the biggest stumbling block right now in communication? The biggest
That's a good question, but maybe I think listening skills? No?
language.
Language, yeah. Well, it's
Language.
part of it. Language, yeah.
Language is our biggest at this moment. I'm not saying it's the hardest, but it's the biggest. And with AI, we're moving towards, like if you've ever seen Star Trek, they have the universal
Yeah.
translator. We're
Yeah.
heading towards that very, very fast. I mean, you can right now with the AI, you can have a conversation with anybody in any language.
Mm-hmm.
It's not 100% where I'd like to see it, but those are the type of things as technology gets better and better, it will help us understand things more and more.
Mm-hmm. Yeah.
So imagine if you go into a conference with somebody on the other side of whatever your topic is, but your AI gives you all of their talking points and gives you the reasons why they think the way they are, or why they're presenting it that way.
Mm-hmm.
So
Mm-hmm.
it could get to a point where you're going to have that understanding right from the get-go. You'll understand what's going on with the other person. They'll understand what's going on with you. It'll make it a lot harder for things to get spiral out of control. Now we're totally not there yet. Right now, things look like they're spiraling out of control sometimes, but I think it's gonna get really good in a sense, and we will get to a point as well, and maybe people don't like this, but eventually AI will do most of our stuff,
Yeah. 100%.
you know? People are worried about AI taking their jobs, but obviously
It
what
will happen at one point
it's gonna
because
happen, it's
it's
already
cheaper.
happening.
Yeah.
Like, right now,
The
if you work in a
replacement's already
call
starting.
center, you're probably not gonna have a job for that much longer.
No.
I imagine within 10 years, you'll be replaced, if not
Yeah.
sooner.
Even
But it's
faster
gonna happen.
from
The
where it's
thing
going.
is, and here's the thing, this is the thing to keep in mind, we're not just going to sort of say, "Okay, sorry, AI is gonna do everything, so humans, well, no, none of you can eat anymore, you're all gonna starve, you got no money."
It's
No,
the
we're
end.
not we'll build a society. I mean, if you look, and I hate to go back to Star Trek again, but I'm going to,
It's great.
when you look at the example of the future that they presented, it's a cashless society. Unless you're
Huh.
Ferengi, then for some reason gold pressed latinum seems to be important. But overall, it's technically a cashless society.
Okay.
Whatever your needs are met, and that means that everybody will have the opportunity to do what they enjoy. So, for example, if you love science, you can be a scientist, no problem. If you love music, you can be a musician, no problem. If you love physical labor, well, you might have a hard time finding that as a job, but nothing stopping you from going out in your backyard and digging a hole and then filling it back in and digging it again. Sure, why not? We'll be able to do whatever it is we want, but it'll help. I think it'll help humanity expand in ways that are maybe unexpected at this point.
Hmm.
But I think it'll be a good thing. There'll be adjustment. There will be people who are like who don't know what to do when all of a sudden they have a lot more free time. There will be people who will be like bored out of their minds for sure.
Yeah.
But I think as new generations come along and we get used to the fact that you do what you want to do, I think you'll see a lot more people doing artistic stuff. You'll see a lot more people just doing what they want to do.
100%. Yep. When there is no sort of like stress or immediate sort of mental blockade,
Well,
then
yeah.
that creative mindset starts flowing. I don't know if you've ever noticed, but creativity, like if you're forced into a position to be creative, then that creativity does not come. It just no matter what you want to do, like it's no matter like if you're trying to like say for example you have a tight deadline and you need to do some kind of creative project, as soon as that stress indicator and that deadline is in place, no matter what, your mind goes nowhere. It's like there's some kind of blockade. But then once you're doing some kind of like mindless or menial task, say for example, like you're going to the gym, you're going for a walk, you're just having a conversation with someone, or you're just enjoying life or being in the moment, then without any sort of expectation in place, then that creative mindset starts flowing. So really, creativity is going to start flowing out from everybody at that point
Absolutely. I mean, a lot of my
without
video
filters.
ideas come to me when I'm working out.
Do you go to the gym or do you have a
No,
separate
I
gym at
do it at
home?
home. I don't have time to go to the gym, to be honest.
No? Okay. Where's the
No,
nearest gym from your place? Is it that far away?
couldn't tell you.
You just never looked that up.
No, I know. I never looked it up. I mean, I got a pair of dumbbells. They're adjustable, so they'll go up to about 50 pounds each.
Oh, very nice. Those are very flexible.
Yeah, and a kettlebell adjustable as well. And I got a space that I can use, so I just do it here. It's because I don't have a ton of time.
Mm-hmm.
So, for example, tomorrow morning I'll work out, and then I will go straight into scripting because I have to film on Monday. So,
Right. What's the new topic that's upcoming for Monday?
somebody came up with a great idea. They wanted to know. They asked me actually in the last live what were my top 5 favorite ETFs.
ETFs, huh?
So I'm like, okay,
No limit.
I was like, I'll do that in a video.
Fair enough. That's the next pick. So
Yeah.
did they say anything in terms of growth, dividend growth, or
Well,
income,
I
or
think they actually asked me what my top 5 covered call ones were.
of
So
course it's covered quite.
yeah, it was covered call. So I'll do that. I'll do that tomorrow. You know, and that's the thing. I'll be thinking about it tomorrow when I'm working out. I got a good idea anyway, but
Do
as
you
I'm
want to give
working
us a
out,
little want to give us a little sneak peek of what
well, I mean,
that would entail?
we've been talking already. I mean, I mentioned at least 3 of them.
Okay, so that list similarities.
Yeah, it's gonna be similar. I mean, I'm not gonna come up with like 3 that or 5 that nobody's ever heard of. Now, not to say somewheres down the road I could do a list where I'm like my top 5 favorite new ETFs, and look at all of the new, and that's probably a good idea because there's so many new ones. But yeah, there's a lot of different things. And that's one of the things I have no problem. Like if somebody asks me a question in a live stream, or if on the channel member chats,
Mm-hmm.
one of them asks or suggests a video. If it's good, I'm doing it. And a lot of times too, I'll even sometimes I'll do it as the next video. I'm like, that's a great idea. All right, let's just do it. Bang, boom, it's done.
Bang, boom. That's it.
That's it. Give the people what they want.
Exactly, and that's how you grow with them.
Occasionally, I will get some suggestions from the audience that are going to be just dreadful videos if I made them. So I can't do everything because sometimes it's not. I don't even think that they realize it's a bad idea because you have to sometimes think about it to sort of realize whether it'll work. And you have to kind of know my audience. So one of the things I've been hesitant on is I get a fair amount of requests for some US dividend list. And the reality is I will have to take a viewership hit on that if I do it.
Mm, okay. Why is that the case? Are they just is there
Well,
just
because
less interest?
most of my audience is Canadian, and they're not really interested in USD ETFs.
That could bring in new viewers though, because
It
I don't
could.
know if you've actually saw like Adriano, Perry, Jordan, and Paul. They actually just did a Five Horsemen podcast of sorts where they were
Yeah, I
talking
saw that.
about yeah, they just released it last night. And Perry was mentioning that with the report of his incoming subscriber growth rate that is constantly increasing, he did notice that now there's a huge spike in US investors who have a lot of questions. Be like, Perry, you have such a great report in foundational and core cover call ETFs in the Canadian space. Like we all know them from Evolve, from Harvest, from Global X, and from Hamilton. But where are these picks and suggestions on the US side? So now there's a huge influx in the US side that are really interested in different options. So that's something to really think about. That could bring in new viewers from your current subscriber
Yeah.
base.
Well, I'll break it down for you right here. I'm just going into my analytics.
Mm-hmm.
So right now, my top five. My top five. So Canada, 76.6% of my audience.
Mm-hmm.
United States is at 11.1%. United Kingdom, 0.4%. India, 0.2%.
India. Okay.
And Australia, 0.2%. Interestingly enough, now I have to expand this further because I have a few I've got at least one fan who's in all the time from Sweden. There's Sweden. Sweden is so low, it's still listed at 0.0%, but I've gotten 315 views from Sweden. But now here's something interesting. There's just a few countries here. I'm not going to mention what they are, but there's a couple of countries here I'm looking at it and I'm like, yep, that's all spam. Those were all spammers.
Yeah, bots. Yeah.
Because I do, and you'll get this. You'll get this person who will come in and they'll say, "Oh, I've been talking to Joe Blow, and Joe Blow helped me make $100,000."
Yeah.
And then 30 other people will quickly appear and underneath saying, "Oh my God, yes, I worked with Joe Blow too, and he was great." So those are all coming
And then
from, I'll
redirecting
just
to, oh,
say,
we can find them on WhatsApp, we can find them on Telegram, we can find them on Cake or whatever other platform. So
exactly.
yeah.
I won't name the countries, but I'll just say third world. So when I see a third world country, they're probably not watching a Canadian tech or Canadian finance video.
Yeah.
They're probably working in one of them scam centers type thing. So yeah, but trying to see if I've got anything really interesting in here in this list now that we're looking at it.
Mm-hmm.
I've got New Zealand, Barbados, Thailand, the Dominican Republic,
Okay.
Greece, Iraq, Israel, Romania, Hong Kong, Hungary, Jamaica,
Mm-hmm.
Vietnam, Finland, Cyprus. Okay.
Very interesting. Big, huge diversification, huh?
Yeah, and there's
Of
probably
audience.
more, but this here, YouTube only shows me the top 50.
That makes, I mean, 50 is actually already a lot. Like, Jesus.
Yeah, exactly. Exactly. But anyway, yeah, I do want to do it. That's why I haven't said no to the US one. I just kind of want
I
to
think it's a
clarify
good
where I was
idea for
going.
sure.
I'm just sort of looking at a place where I can put it. Like if I'm having a really strong month, maybe I'll put it in there where the rest of the videos can sort of buffer it out.
Mm-hmm.
And then, yeah, I mean, I don't mind. I don't mind picking up more US. Like I've got a few. Well, you've seen Larry in chat.
Yes, he is very active. He has his he
He's
has
a
his
tech.
own hedge fund, right? Basically,
He does in
at this point.
Texas. Yeah, he used to work. He used to work for Tesla, so
Mm-hmm.
he has a little bit of the inside sometimes on Tesla.
Yeah. Don't bet against Larry. I don't think you will do very well.
No, I would never bet against Larry. That's for sure.
So, touching base on what I wanted to say is you have such a broad diversification in terms of finance knowledge. Do you want to share a little bit aspect of how did you come by with your financial education, and did you and how did you start out in your own investment journey?
Okay.
I think that's something to I think that's a good last topic to touch on. So
Sure. So yeah, when it comes to my investment journey, as I mentioned before, my background didn't really touch a lot on
yeah,
investing,
for sure.
but kind of after I was looking for what I wanted to do next after the end of my technology run.
Your managerial decade, right?
Exactly. Um, I actually came upon a video by Kevin O'Leary.
Okay. Okay.
All right. And he was going on about how easy he was talking about investing. He was talking about how easy it was and how people don't understand it. And I was like, that's true. And the stuff he was talking about made a lot of sense at the time. So I was just like, okay, you know what? I kind of want to learn about investing. And that was what sort of sparked me. So, I started the way most people do. I went to YouTube, watched a few things. Then at that point, I started going to things like Investopedia. Then I started looking at some books. Like I started with one of the first books I think I read was the Dummies Guide to Investing in Canada.
Okay.
Now, I also read the course material for the SEC securities course. So I go in deep. I read and I absorb as much as I can. And that's where I go. Now, do I know everything? Gosh, no. Every so often, less now, but when I first started, almost every live stream, I learned something new from one of the viewers or they gave
Mhm.
me something. But here's the thing, and this is what I will do. When I get a question that I don't know, I will point blankly tell you I don't know the answer,
That makes sense.
but I will go and look it up. I will go and find out. So I love it when somebody stumps me with something because it means I'm going to be learning something new.
Mhm.
To me, that's always fantastic. I'm,
Yeah.
lifetime learner for sure. But yeah, my strength, and I think this comes back to training. So when I was a technical trainer and when I was the manager of training, I would be given new information that had to be disseminated to students immediately.
Mhm.
Sometimes I would be given no time. Like, I'll give you this example. I'll use when I was the national training manager, one of our companies, actually TELUS, they had a back end system that we used for our ADSL. So
Mhm.
because we were reselling their ADSL,
Right.
but the entire portal on how to set up different tests, how to use it, completely
Mm.
changed.
Yeah.
And all the information was dropped on my desk, and it's like, yeah, tomorrow this needs to be trained to everybody in the call centers.
Just like that, huh? Wow.
Yeah. So I immediately set up training sessions with all of the trainers for that afternoon. And I had quite literally a couple of hours to teach myself the entire thing so that I could teach them so that they'd be able to teach all of the agents. And that's how fast of a turnaround it is. So I became very, very good at absorbing information quickly. And it comes back to this whole thing, my whole presentation. So when you watch my show, it's not boring. I
It's really
can't do a
not, yeah.
boring show. I
Mhm.
can't. It's no way it's happening that way. But it comes down to this thing. If you're out driving and you're just driving along, and you go by a field, you look over at the field. Okay, fine. 5 minutes later, do you remember that field? No, no, you don't. You really don't. Now, you're driving along. Do, 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 do. You look over at the field and it's like, huh? There's a naked guy running across the field. Holy banana bread. Guess what? You will never forget that field. You'll never, never forget it. Why? Because it stimulated more than just your normal visual cortex. It created intrigue. It created a connection. It
Mhm.
created a connection to something that stands out. And we tend to remember things that stand out. So I like to. So, for example, I've started doing a monologue at the beginning of my
Yes, for the
weekend
news, yeah.
show, putting all the news together. And I try to throw a few jokes in there because you know what? It just helps make it go a little bit easier. It makes it a little more memorable,
Mhm.
makes it stand out. And that's kind of my whole approach to teaching is I try to make it memorable. I try to make it fun. Give you an example. When I was a trainer, before I became the manager, I walked into my training class one day and we were going to be talking about different tools. One of the tools we were going to be talking about was ping, which, if anyone knows what ping is, it looks at all of the bounces that your packet takes along the way on the internet. So I just walked into the class with a ping pong ball and I just bounced it and it went all the way down the long row of tables. Bing, 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 bing. And I was like, do you guys know what that is? And someone's like, it's a ping pong ball. I'm like, yeah, it's a ping. And then I went from that into my lesson on using ping as a diagnostic tool for what's going on
Mhm.
with people's internet transmission. So, you know, little things like that. I also did magic in the class too. So,
Entertainment goes part with your personality pretty much.
well, one of the best ones I did is I had this one class. I had to give this a customer service class, and I normally don't teach customer service, but I thought, okay, let's start with a bit of a bang. And I started this game. Now, what I wanted to do is, it was a word game about working together and all this. I wanted to get someone to say the word teamwork. So I wrote on a piece of paper, Maya says teamwork. Joe says teamwork. So for everybody in the class, I had a different piece of paper. I
Mhm.
had all of these in envelopes hidden on my body in different places.
Very
Then
smart, very interesting.
Then I used a little bit of the way I talked and everything to manipulate somebody into going, teamwork. And it ended up being Maya. She jumped up and said, "Wait, that sounds like teamwork." And I then faked at her envelope was on my left leg. I faked a small cramp and I reached down and said, "Oh, my leg. Oh, what the heck?" And I pulled out the envelope and I said, "Oh, this has got your name on it." And I handed it to her and she opened it up and inside the card said, Maya says teamwork. And she was, she was kind of a ditzy girl, but she just freaked out about it. She was just like, she was bugging me. They're saying, "How did that happen? How did that happen? I don't know how that happened."
It's a magic trick.
Exactly. So, but yeah, I did a few different things like that. Some palmistry as well. Like not palmistry as in reading your palm, but as in palming things.
Mm-hmm.
Because I did this thing where I was actually one of the best ones I had is I had a small ball from a mouse. Like if you've seen the older mice, they had balls in them.
Right.
So I took one of those balls, I had it palmed in my hand, and I picked up one of the old modems that we had taken back, and I was talking to a tech class, and I said, "Oh, what do you think of these ones?" They're like, "Those ones are pieces of crap." I said, "These are perfectly good models." And I hit it, and then I dropped the ball as though it came flying out of the
Mm-hmm.
modem.
Yeah.
Of course, that got a tremendous tremendous applause to that. And then a few people were like, "How did you do that?" But I was like, it's just,
Tip of the trade.
Yeah, exactly. But yeah, that's kind of the way. And I treat the channel that way. I try to do, like heck, some of my celebration videos, I've done the Hot Ones challenge.
Mm-hmm.
One
That was
video I got
iconic.
drunk.
I haven't actually seen that one,
Yeah, it
so
was a live stream and I don't drink. So just so you know, that was fun.
okay.
But yeah, so I tend to do different things. Also, there was the second hot challenge is that one where I took the whole spoonful of
Yes. Yeah. The bomb, yeah. I remember that very
so
well.
I will have another one of those coming up at 10,000 subs. So
It's
that'll
coming soon.
probably around the end of the year, or at least either the end of the year or early January. But
Mm-hmm. That makes sense.
yeah, oh boy, I
All
don't
right.
even know yet what that's going to be. I've heard some suggestions, and I don't know if I'm crazy about them. Chocolate covered crickets, like no, I don't want to eat chocolate covered
Okay.
crickets. But apparently, there's a gummy out there that's the world's hottest gummy. So
I've seen some clips about that, and it's
that's a potential. That's a potential.
supposedly it's like 9 million Scoville units.
Yeah, that
Supposedly.
was a potential. So we'll have to see.
Okay. Please don't die afterwards. Just
Yeah, no, I won't die. I can handle the food. I'm dramatic about it, but I can still handle it.
I think I will probably top out at like 1 million. So
There we go.
yeah, if that ever comes to it.
There we go. Or what we could do is I'll bring you on and we'll both eat one.
Sure. Let's see what happens. That could be a
See
very
what
interesting.
happens.
Yeah. Dude, I could probably do this in person because I mean, you're in Ottawa, right? So it's
That's
only
right.
a
You're not that far away.
2
You're
hour
just over
drive
there
away.
in Montreal.
Montréal, exactement.
Yes, exactly.
All right. I think this podcast has been a very informative session, and it's gone
Absolutely.
on
It was fun. It was
pretty
it's
long.
always fun. It's always fun.
So before we end this, where can viewers find you on YouTube?
On
Plug there.
YouTube.
Yes.
Wow.
Or on YouTube or any other platform as well.
Absolutely. Just look for Mountain Finance. I think I'm the only Mountain Finance out there. So
Yeah.
simple as that. Yeah, come on over. I certainly will appreciate entertaining you as I, bring you those ETFs.
Exactly. Road to 10,000 subscribers. And that's it.
Exactly. So if all 200 of you get over there, we're a little bit closer.
There you go. And what about on Blossom? Because that's probably where the majority
Once
of the audience
again,
would be.
Mountain Finance over there on Blossom
At Mountain
as well.
Finance. All right.
Absolutely, yeah.
So right before we end this, is there one little snippet that you would want the audience to remember by, assuming they've gotten this far into this 2-hour-long podcast?
Well, first of all, wake up. Come on. It's over. Wake up. No. Yeah, I guess if you want a little snippet is, I got my key phrase. My key phrase, holy banana bread. So yeah, I should have worn my holy banana bread shirt.
I mean, we'll do this again and you'll be able to wear that. for our next
There we
time.
go. Absolutely. Yeah, no, I think the last thing I'll end on here is this is a really good community. Like, I think, you know, you don't have to sort of choose one person to watch, to listen to. I think if you watch everybody, well, not everybody, but, you know, watch myself, watch JJ, maybe Adriano, Gary Gill, PPI verse. I think,
Yeah,
you know, I think there's a
Pipers,
good mix, and I think that we all complement each other pretty well.
100%, yeah.
And it's also good. I think it's a healthy thing as an investor to not just get one voice, not just listen to one opinion. Listen to them all and make up your own mind what you want to do, because it's your money. You worked hard for it. It deserves that extra attention for sure.
That's a great sage advice that fits well for all investors alike. Well, I thank you very much, Candace, for your time tonight. And thank you to the audience for joining us. And we'll see you in the next one. Bye for
everybody.
now.